Good morning, everybody. I'm Grady on the charts. I just had a bit of technical difficulty this morning, so I I just needed to get everything all sorted out so we can hop right on here. And so the market just kind of opens up and it drops right down here, right off the open. I've been tracking this all pre-market, trying to figure out where I believe that the market was going to go today. Um, let's see here. As far as the news is concerned, today we don't have anything important coming out, although that says Wednesday the 23rd. That's tomorrow. So there's nothing today. All right. So that's one good thing. All right. So we kind of have this pop up immediately off the open. That's exciting. And the first thing that I'm thinking is going ahead and putting in my short entry right here. I was watching this level all morning, and then we ran up to this point. We just tapped right into it, and yeah, I don't want to jump the gun. Excuse me. Don't want to jump the gun. It's just that I did not want to as soon as the market opens and I see a great opportunity, I hate to let it go by. We kind of went let it go by yesterday, and today we see we're tapping off the underside of this up close candle right here on the 1 minute chart. So I am going to hit the sell button. I didn't get a reaction, right? I clicked the sell button and nothing happened. Excuse me. Strangely enough, sometimes that's a saving grace for me. Attempt to get it again. Okay. Right. So entered immediately off this open. So in the pre-market, the London session went above Asian session, and then we moved up in this range. So we kind of matched this high. Then this high we traded all the way through. Then we traded to the low here, and then this is the second time we've come up here. The bodies have closed here, and the highest that the wicks went was consequent encroachment of this gap. That we could pass through it this time, so that's still possible. But I just wanted to take a look at it early on to see whether or not that was going to be a good place for us to make a decent little entry. Um, I don't necessarily need to hold this. I mean, I could just go ahead and scalp this out and wait until the market matures just a little bit more. But I'm in it right now. I'm in it, and I think break even would be a good idea for us at that point. Um, let's see here. 28, 29, 42. See, price it isn't really processing. We just dropped down and we took this low out. I'm just looking for just more movement to the downside early on, right off the open, because we had this flash to the downside, right? And then a rejection back to the upside. We did not close above any of these levels. Then we just started moving lower. For a first trade scalp, I think this would be just a little decent movement. I do not want to see us go into any drawdown here, so I'm willing to take the $20 and then wait till later. Let's see what we get here. I mean, we dropped it into this imbalance, which means that we could push higher, but how much do I want to risk right now, right? I do not want to overstay my welcome on the 1 minute chart. I'm eager to see whether or not this down close candle could get below this up close candle that is near right here. Excuse me. As always, I'm curious to see if there's a formation of a first presentation fair value gap in these ranges. We are just hovering at this level, which makes me believe that I need to go ahead and when I see us come back this way, just go ahead and exit. 3 minutes left in the 5 minute candle. There's 3 seconds left in the 1 minute. And I'm going to go ahead and just tiny little 50 cents right there. Mm, okay. So that was just a little bit of excitement immediately off the open. I wanted to see whether or not we're going to get an immediate rejection of this gap, of this level, and then a movement to the downside. If it were going to be immediate, then I was just going to sit into it. But there's an opportunity or a chance that we're actually going to create a bit of a respite for the downward price action. Moved up, down below these candles. 2 minutes left in the 5 minute. Looking at the relationship between these last two up close candles and this 5 minute candle. We move to the low of that candle. Let's see if we bypass it. We traded to the high of that up close candle. 47 seconds left on this 1 minute. No gaps really formed yet. Mhm. Okay, price is still failing to move above this range. There's 1 minute left in the 5 minute candle. We moved up above this up close candle to the low of this one, put a wick into its body. Then we turned over here. So, yeah. So yeah, my eye is still scanning this area looking for this first presentation gap that I was expected to see, and still don't see even the smallest of imbalances here where price would use it as a gap or so. Still don't see it at all. I see this 5 minute candle beginning to fail after we retested the low of this gap. 24 seconds left in this 5 minute candle here. What do we get next? 17. Or 20 minutes left in the 4 hour candle. 20 minutes left in this hourly candle. Nice, 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 nice. Last 10 seconds of the 5 minute candle, we were able to close above that up close candle. It's one of the magical things of a 5 minute candle. 17 seconds ago, it appeared that we were way down here. And there was really nothing else going on with it. Okay. In the 15-minute chart, the low wick of this current candle dropped into an imbalance. Up above a gap. Oh, excuse me. And the reason that I make a note of that is that we could see higher prices today. We had so many down close days. I believe we had 3 down close days in a row. And I was curious as to where this day could end up. We opened with a very narrow opening day gap. I mean, new day gap, and moved higher from that point. So we're moving up yesterday's range. So that's really cool to see. But I'm just really curious to see whether or not we're going to just run to the new week opening gap, the new week gap rather, and then trade lower, or whether we're going to actually start seeing higher prices from this point forward. Hmm. Here, we closed above this up close candle very quickly. Okay. But for me, we were still inside this imbalance. I didn't see any real market shift until we got here, turned over, dropped into this down close candle, and then we moved up. So I believe we've just taken what the pre-market high. Right, there's the pre-market high. This is the high of London. We just went up right up above it. Pull that forward. This is not an exact price. Just want to pull it forward though. That's the high of London. Mm-mm. Oh. Excuse me. Mm. And I'm saying, huh. I'm saying, huh, over and over. And what I'm looking for is I'm looking for a reason or opportunity or a place to either to consider where we are in the move in this bearish marketplace that we've been in for the past couple of weeks, and where we could possibly be right now. So the question is where are we going, right? Where are we going? How far up are we going to go, and why are we going there? Okay, again. Now we see prices kind of stretched out a little bit. Mm. When I say a little, I mean a lot, but there's this pre-market imbalance that we dropped into, right? We traded to the premium of it, wick into the discount, and then we moved away right off the open. Low and then a lower low, and then we started moving up. What does that mean, though? What does that mean? What does that mean? What does that mean? How can I get involved with this right now when I see that we have 15 minutes left in the hour? We have 15 minutes left in the 4 hour candle, and then all of a sudden, price begins to rally aggressively straight off the open. Okay, it's 9:45 a.m. By 10 a.m., we're going to be somewhere. Mm, 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 mm. By 10 a.m., we will be somewhere. And when we get there, number one is where are we going? Hmm. Hmm. And the reason I'm asking that, as far as my first question, where are we going, is are we going to the monthly high, right? Are we going to the annual high? Are we about to take the complete high off this thing? And you're saying, well, what does that mean? Well, that means if this candle on a 5 minute chart were to decide to um, slow down, stop, open up, drop a down close candle into this gap, is it the precursor for an extended move that will last the rest of the day, that will continue to rise and rise and rise for an extended amount of time? Well, right now, it's made a beautiful move right off the open. And I love how I feel these moves coming, but sometimes I get on the wrong side of them. That's 129 points immediately from the open. That was a good move, good, strong, solid move, and I like that because it gives us the idea that there's going to be some opportunity today. Now, what I would not like to see is I would not like to see price begin to accelerate in this direction and stall out. That would be terrible because that would make me feel as if we were just going to run this direction just to show us that if we weren't reckless and just take trades, just took the first trade we saw as the market opened. And it's not being reckless. I mean, most of us who've taken that trade were literally watching the market since London. So it's you could be ready for that particular trade. I think just for me, just that little technical difficulty right before I got into the market was just enough to excite me. You know. Mm, mm, mm. But not so much that I would bet the boat on the decision and just jump in, right? So have we reached it? Have we reached the area that we would like to reach? It's 9:48 a.m. Macro's firing up. We're in the premium of yesterday's London session. We're in the up close candle. We're in its wick. Our current price is in the body of highest up close candle in the range before yesterday's move down. And again, no, I wasn't yawning like this before I started streaming. I wasn't. I was just sitting here chilling. Then I began to speak, and then all of a sudden, it's yep. And I got up, went for a bike ride, showered, got in here, got seated, and you know, this starts happening. So just looking at this little hesitation point here in price at 9:50 a.m. Yesterday, the 9:50 a.m. point was the moment that price actually changed direction. And then it just continued through the entire macro. So the macro was just this immediate, registration of price and then delivery to the downside. Let's see if we get that again today or whether or not we're going to see something um a little more textbook. Mm, 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 mm. I think it's interesting how today's market has such a time extension between um the moves down and the moves up. Okay. What is this? Is this a curl over here at the high? Okay. Drop low into this imbalance. I'm going to mark it out as a FVG just because it's just a light feel of on the screen. It doesn't really obstruct the candles. It just, kind of shows us what we're looking at. So we have slight imbalance. Swing low, long drive below all of these lows, down into the gap. High close in the gap. 9:51 a.m. 8 minutes and 32 seconds left in the hour. That means 3 minutes in this 5 minute candle, and then another 3 minutes. Oh, sorry, another 5 minutes in the next 5 minute candle. Hmm. It appears we're forming the wick on the hour right here. 7 minutes and 45 seconds left in the hour. I'm not sure exactly where this candle is going to close, if that makes any sense. I'm not sure where this candle would close. And the issue that I have with that is whether or not price will run on the new hourly candle, whether or not price will, um, wait, what am I looking at? Nope, nope, something's weird here. You see how that says 37? That says, what did I do? What am I looking at? Why did they say 3761? What time is it? 9:53. What is going on? I'll try this again. 1 hour. Ah, I get it. 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 Okay. Okay. It's because of the regular trading hours. Oh boy. Scared myself there for a second. Okay. Yeah, we have 6 minutes. So the idea is this wick from this high to wherever the close is. That in the new candle, we could ascend this wick to a certain degree, but we need the close to see how far up this wick we ascend, and then we could descend, or conversely, we could open from this level, descend, and then ascend. Well, Grady, what if we open and only just trade to the high and then descend, right? And then this is the opportunity that we would have to get into the trade here. Well, this is what we would do. Okay, this would be the game plan. The game plan would be to take our part. The game plan is to take our part, to take whatever our section of it would be, right? That's it, right? So you could say, hey, Grady, there are 18,240 points on the screen. Are we going to take all 18,240? No. We're going to take a small, almost minuscule, absolutely insignificant portion of this total range. From the highest point that the market has ever been to absolute zero, we're going to take a infinitesimal fraction of that. And that doesn't matter whether or not it's this or whether or not it's 3,000 ticks or 3,000 handles. That's just a very small portion of the total movement of the whole market. So now that we've traded to consequent encroachment, I am still looking at the conclusion of this last 5 minutes. This last 5 minutes is going to conclude the hour. We're looking for the closing price, and we're looking for um, movement inside the wick above the close if we were to get short. What if we were to get long? If we were to get long at this point, I'm not quite sure what type of an entry I would want or what type of trade. See, you see, this is why I record these screens. I'm sitting here looking at the screen and this is why I record. I'm sitting here looking at the chart and something appeared on my chart in the background that was not uh something that I put on the screen. It was like bands and bars, vertical bands and bars, like ranges, like daily ranges, like time-based ranges across my screen. No, did not like it. Did not like that at all. I did not like that at all. But I'm not going to let that distract me from what I'm attempting to do here because I'm looking at the time. I'm looking at this time first. It's 9:56, 45 seconds. We're coming into the close of the opening range, right? So the volatility opening range was a very healthy move. We have 3 minutes left in this hour. We have 3 minutes left in the hour. We want to take our time and trade it properly. We want to get on board, but my thought is get on board now, or new hour opens, we go above this, then we trade below this, create a beautiful looking market structure shift, and then we get involved. Well, Grady, is this a market structure shift? This little wiggle below that level? You know, I would love to see one that's far more pronounced, far more obvious, pronounced, and clear, especially on either the higher time frames. I mean, 1 minute compared to a 15 second is a higher time frame, but it's just not enough volume in it to say, yeah, 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 that's a shift in market, or it's just just a slight pullback before a particular movement. 1 minute and 56 seconds left in the hour. We're gonna have some fun today. I have a very, very distinct feeling we're gonna have a lot of fun today. Come on, baby. And the thing that I'm really requesting is number one for my eyelashes not to dirty up my glasses like this, so I can't see crap. Number two, 1 minute 16 seconds left in the hour. Not really looking for an immediate delivery in price as the hour opens. I would like to see market structure begin to set up though to show us that possibly later on something else would be developing or coming into play. Just trying to get a little bit of that oil off my eyelashes. Great. So before the hour closed, we ran its own high. Before the market closed, I'm sorry, I keep saying, what am I saying? What am I saying? Before the hour closed, we put in this short-term intermittent high. Then, as we came into the last 60 seconds, then we ran that high on the hour. So this move down had me thinking, oh, look, a short opportunity, right? A gap. We go below the gap, we trade up to it, then we move up above it. And now, new hour. Here's the close of the prior hour on the 1 minute, practically no wick down below that prior high. This is one of those times where I say to myself, hey, buddy, what could we really do here, right? What could we really do, right? New hourly candle pushes forward. As you can hear the entire time that I'm speaking, I am looking for this candle to run to a point of interest, and then seemingly at this point I was expecting us to be there, and then I have been expecting price to go through whatever um, calculations it needs to make in the macro. And because we went this direction first, my anticipation was going to be that we were going to um I don't want to try to catch the high here. This is probably a mistake. It's probably going to give me a bit of drawdown here. Probably gonna give me a better bit, just a bit of drawdown here. Um, so the macro's coming to an end in about 8 minutes. It's 2 minutes after 10. So there's a possibility that we could also run these highs, right? Because we've come into a high, prices kind of hesitated. I'm not the only person who decided to get short here. Thousands of other traders probably decided the exact same thing. Being where my stop loss is, there are probably thousands of others, probably with greater risk and size than mine. Being the market says, well, statistically, we need to go to particular areas at particular times for the purpose of running out liquidity. Then we would go up above possibly and then hit our stops, and then we would see what would happen. This slight movement down on the 5 minute chart, it looks like price might be breaking down. However, it looks like we were just going to drop down and touch the opening price of the prior down close candle. Right. So we're not truly bearish because we've never really had that market structure shift that I described. So this is an outsized entry where where it's an extremely risky entry is what I want to call it. And I think that we all can see that because it's like my entry and then my stop is literally like right there. The I guess coming into the market, I have been attempting to um control this um, sort of a risk on nature because I was working myself out of drawdown. And we are extremely close to getting out of drawdown. So maybe I should think about that, before I start taking any extremely risky entries and think about working my way out of that drawdown and doing so in sort of a basic and consistent manner. Because maybe I'm thinking that because I've been digging myself out of drawdown and I've been doing so consistently, where I've been stacking, larger wins on top of smaller losses, I'm starting to get that, I'm starting to get that feeling, right? Like, oh yeah, this is going great. But I think that's gonna be, look like it's gonna stop us out here. I think that's not gonna help us. That's not gonna be the thing that's gonna help us move forward. Yeah, there we go. That's not gonna help us, right? Because we're taking these risky entries. That was not a market structure shift. We moved up. We had these two uh, handles, and then this price action. And what I was really looking for was, and I'm sure you've seen it if you've been trading. And I don't. A lot of traders have these names for everything that they see. I, I, I see it. I can see it, but I'm gonna tell you, I can't really name it. But sometimes at the end of a run, there'll be two up close candles, and then it'll go sideways, and then it'll drop, and then it'll pop up just a little bit, and then like these two up close candles would be here, and then it would just run right past it, right? It would just fall right past it, and then close behind these below these down close candles to this side. And so that was sort of like this, right? Something sort of like this, but not on the 15-second chart, but on the 1 minute chart. So on the 15-second chart, this is the idea that would have lured me back in. But I would have needed to see this candle close below these two close candles, 3, 2, 1, just like it just did. Then we moved back up the range. And now, come on, keep going if you're going to keep going. Please show me. Please show me you're going to keep going. Thank you. Don't have me believing that we're going to run to the low of these up close candles in the reverse. So while I was describing it, sometimes this will fall. We'll close below these down close candles. It will not make it back up to the high of that, and then it will plummet, right? But I can't guess that that's what's going to happen next. If it happens, then I just need to be ready for it, right? And if I start taking too many of these trades, then see what I mean? I don't even have the vocabulary for it today. It's just you see something, you say, ooh, right? I don't, Okay, so now it's 10:07 a.m. and the macro is going to conclude in about 3 minutes. But I'm still sitting here looking at price like this. And it's so funny to me because we just started a new hour and we are 8 minutes into it, I believe. Yeah, roughly 8 minutes into the hour, coming up on 9 minutes into the hour, and we've taken out the prior up close candle. So now we have a nice consecutive row of consecutive up close candles to look at. Um, no, mentally, I'm not bullish at all. Not bullish at all. I'm anticipating that we're going to run to a particular area, and then I would like to see collapse. I would like to see price begin to come back into the range from that point. Maybe to, I don't know, this week's opening price is coming up pretty soon. Our opening price for the week is here. So this is where we open. Then price ran higher, and then we've moved down from this point all day yesterday. So today's extent of today's body is equal to the same range as the body from yesterday's candle. They've kind of just equalize with each other. I was wondering whether or not we were going to have some sort of an inside day where it's going to be a low range, small range day, where the high and the low of today's candle would fit inside of that of yesterday's candle. But we'll see. Mm. Mm-hmm. 48 seconds left in the 5 minute candle. Mm-hmm. There we go. On the 5 minute chart, beginning off of the open, first plunge to the downside. Whoa, manipulation. That's exactly what that was. We ran right down into a fair value gap, and then we've been moving up from that point ever since. Ever since. And the funny thing about this is I tell myself all of the time, look for that 3 9 a.m. imbalance for us to trade to. And I can't seem to find my way into that trade on a regular basis. But it's there very, very, very often that, we'll just look at we could just look at some pre-market area and then it just delivers for us, which is this wick. Well, let's drop down there, move up. That's an hourly chart. And now we are way back up here. There's a small imbalance right here. Sort of just this overlapping a gap in price where there's a wicks going back and forth. Oh, oh, oh. I believe that Wednesday and Thursday of last week closed at this area right here. Wednesday and Thursday of last week closed in this area. Then Friday we did not have any price action. Nope, this is Thursday. Yeah. But we close. That's my point. We close, and then Monday opens here. Sunday and Monday opens here. So now we bounced and returned to where we dropped left off last week. Bump, 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 bump. Mm. Okay, now we've just reached a low and just tap that new week opening gap. This is literally um what was yesterday? Monday. Monday price action open here. But Sunday opened around this area. So between Friday and Sunday we have this. Also between Friday and Monday open, we've completely traded all the way across that gap. Now we're at the very low. We're touching that level pretty precisely as price begins to turn over and move back. Okay. That's the 15-second chart. This is the 1-minute chart. We've dropped back into this gap. How? How and where? 10:12 a.m. I'm really just looking for any up close candle that'll trade up and give me clarity. That's what I'm looking for. Some clarity in price, how we can get involved. There's an imbalance. Take that, pull that forward. We have nothing in here on the 15-second chart. We have this balance on the 1 minute. We have nothing here in this range. This loop-de-loop up here, can we consider that balanced price range? Loop-de-loop, right? Move up and move down. What? Hmm. Tiny little 15-second move up right there. What are we doing? What are we going? What are we trading to? Where's price flowing to? And I think one of my concerns is that I get bias blind. Hmm. And I start giving myself this idea that, oh yeah, the market is gonna run up here, tap, 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 and then go down. But so this is the area where I was, oh yeah, yeah, bum, 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 get short. But you see how we made this high, we pushed up, past it. Now, where are the breaks? Right? Where are the breaks? Where are the areas that you guys are gonna just slow the price down, do that regular natural price action that we all look for and love, and give us a chance to get involved? Where is it? Either way, either way, price makes me feel has been making me feel like I'm chasing it all the way up. We're just going and going and going and going and going one direction. We got there so quickly, then we turn over and do the same thing to the downside. So what am I supposed to do? Just chase the price all the way down again? Come on now. Come on, don't do that. We're roughly in the range of the prior 1 hour candles opening price. So all of this price action above has been wick. Mm. I'm really looking for something in this range. Looking for something in this range. Did we go below? I don't want to see that. I would rather see OTE. Are we going to go below this range level here? Are we going to close below this? I know notice we did close below this small down close candle, but are we going to get something that's visibly looks like a market structure shift? This move back to the upside does seem like it would be a great place for me to have shorted. Did I not take it? Why didn't, I did not take that. So that's fine too. It's all good fun and games, easy to do, easy ways to make money until the candles are moving in front of your face. You think it's easy, man. You think it's easy. Do it. Try it. Now, you think this is easy? Just try it. Try to say, oh yeah, there's a high, there's a low. No, there's a higher high. There's the 1, 2, 3 candles. We move down into the gap, lift up, just into this imbalance, and then move down, trade up into the body of the lotus candle. Oh, then move down, popped up to the wick of that candle. Oh, then move down, moved up, then move down. Then what are we doing here? One minute and 46 seconds left in this 5 minute candle. Two down close 5 minute candles. Okay, two down close 5 minute candles. That's what we're dealing with. And why am I saying that? Because in a long run like this, having two down close 5 minute candles is not unusual. Because we would treat it like two down close up close candles in a long range up. The next candle would open, we drop down into its wick, and then we just start building our way up above and take out the high in the next 1 minute and 14 seconds. There's 60 seconds left in this 5 minute candle. We drop down. The high of this candle looks roughly in line with this close or with the opening price of this down close candle. So it just seems as if we've come back and retested this down close candle. It could possibly give us a move up. So on the 5 minute chart, it looks nothing like a market structure shift. Boom, 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 boom. Come on, baby. 7 seconds left in the 5 minute candle. 18,287. See what I mean by perma bear? So I have this bias in mind. Was not able to shake it. Was not really able to shake it. This is kind of what I had saw in mind. My risk is 40. My risk is $50. 49. I don't even know if I can make $50. Just got tagged in. Um, let's see. Let's see. What am I mission? What now? Now, in my review, if I am stopped out and this thing just continues higher through that new week gap and we go on forever and all to the upside, all through the moon, past the stars and quasars and universes, then what am I not taking into account when it comes to how this price action has moved back into this range? What am I not taking into account? What am I not seeing? Right? That's the issue that I'm really stumbling with right now. And I think one of the things I really was struggling with is on this 15-minute chart, just this long wick. We went all the way up there and then we came all the way back here to close. Sometimes I'll make that mistake and I'll take that as rejection. And sometimes it won't be rejection. It'll be um what's the word I'm looking for? Not rejection. It'll be something else. It'll be, I don't know. It'll be just this weird moment where price runs all the way up and then the wick is longer than the body, pulls all the way back, and then the next candle takes off from that very point and then just, blows past that wick. It happens. It happens. And yeah, I might have to come back in PM session today. I might have to come back on in the PM session and just look at the chart there. Um that's probably what I'll have to deal with today. Because what I don't want to do right now is I do not want to exhaust myself with chasing this movement that's gonna either continue to go up, um, coun- coun- counter counter to counter to the greater downward movement of the market. Right. So the greater overall downward movement of the market has been to the downside. So every time price were to pop up, I'm thinking, right, we're just it's a pullback, it's a higher time frame pullback. So that's where my yeah, yeah. That's where I got this idea to go short here. Is that we were running to this point. It's 1024. We've kind of broken in and it's logical area to see price begin to move um to the downside. Um the four overlapping gap area looked familiar. So I decided to put my entry there with my right kind of. So at this point, we're so high in this gap here. Now I didn't like it because we're so high in this gap. My idea was this one, that we would just go right above this first down close candle into the imbalance, roughly to about here, and then see movement to the downside. But we're so far in this range that I'm not liking what I'm seeing, and I'm thinking of bailing out of this trade. Um, because I wanted to just see a wick or two above this level and not bodies closing this high. Mm, no. So you see how we closed higher, and then we moved higher, closed above this candle, and then we turned over and we dropped right back in. That's not giving me a very strong bearish signal. Even if I might be right at this point, just what I'm reading right now is not saying, hey, buddy, you know, whatever. On the 5 minute chart, moving below the opening price of this 5 minute candle is more encouraging than what I'm seeing here. I don't think this is going to hold. I think this is one of those. I think it's one of those times where price says, "Hey, buddy, hey, not that I don't like you, buddy. It's just that maybe next time." So we drop down to the small imbalance, and then immediately start running back to the upside. Nah, I can't. I can't sit here and what could I do though? What could I do? Could I reduce my risk, right? How could I process this where I stay in the trade, although it's in range of my stop loss, right? Should I move my stop loss? Should I mean, should I accept the risk? Everybody's thinking this, right? Remember, the people who if you come across my channel, you're probably a new trader and you're trying to figure out, well, why do I feel like I feel when I'm in a trade? Because these thoughts go through your mind as well. Is my stop loss going to hold? Is this trade going to be profitable? Did I misread? Did I miscalculate again? Right now, we're at the closing price of this prior down close candle, which is also extremely critical area. This is a critical area. Why? Because most of our entries that as we would look at price would be here or somewhere down in this wick. So we would look for price to take out, go past the closing price, maybe into the wick, but respect it, turn, and then move back to the upside. Mm, the reason that I can't, the reason that I can't exit this trade like this is because we've wrestled to hold on, to wait, to get to the right place at the right time. How do we know if this is the right place at the right time? Well, we're going to have to let the trade play out. That's the only way we'll know for sure. We're at the lows of this down close candle. Remember, there are a lot of opportunities for those people who are bullish. This is where they would probably take their entries, right? It would be a logical place. So if it's a logical place to take an entry, it's a logical place for us to think that price would reverse and go back the other way. But now we have 55 seconds left in a 5-minute candle. Important thing, the last 10 seconds of the 5-minute candle, the most important. The only thing that would really make us feel like, oh, well, we're confidently in the right place is whether or not we can get down below these lows and close. But it's not showing us that, is it? It's showing us that it's coming back against us and we should be prepared to take a reasonable loss here because in the last 25 seconds, we saw that it dropped down into the wick of this down close candle and then began to move against us. On the lower time frame, we have a high and then a lower high. But then on the lower time frame, we also have a low, maybe a higher low and a higher low, right? So it still seems that we could be moving to the upside with this short-term pullback into this down close candle to propel us a little bit higher. Roll over just a little bit. 5-minute candle closes here. This candle shouldn't play with us at all. If it's time, this candle shouldn't play with us at all. Either way, it should be either extremely bullish or extremely bearish. Did I read it wrong? Did I read it wrong? What I would like to see is I would like to see that these two candle wicks that are descending would be a very clear representation of what price may or may not actually be doing. However, for at least the short term, it's pretending like it is. At least for the short term, it's pretending like it is. But again, we're not looking for wicks down here. So at any point in time, these were full bodies to the downside, full bodies, right? This was a full body just a moment ago. And so we're not looking for wicks, but we're looking for closes. So in the short term, we could just pump our fist, yay. But in reality, we haven't made the progress that we think we've made. It's just kind of been this short-lived, right? This short-lived, just another wick to the downside into this area. And now we've turned over. And this one is coming in really fast. 8 seconds. 5, 4, 3, two, one. I really want to see these candles on the 1 minute continue to fail at these up close candles. I would love to see these candles fail here at these up close candles. If we violate this up close candle, I'm gonna get out. I want to see us fail here. Go down below that up close candle on the 1 minute. It looks spongy. It looks spongy. Yeah, it looks spongy. See, I mean, what I'm looking for is I'm looking for a pierce, right? I'm looking for a Swiss cheese. I'm looking for holes, right? Fall through. With a sponge, you press down on it. Then as soon as you move your hand, it pops right back up, right? So it looks real spongy. And we did not violate the prior up close candle. This candle, come on, don't. This yeah is playing with us now. We did not violate the prior up close candle, but now we are bouncing back and forth inside of this up close candle. But we need to get down below this prior down close candle and close. Nope, I don't want to see that. Come on, go down. Not. I mean, you're gonna have a few more ticks before I'm gonna exit this trade. And if it goes my way, then it's gonna break my heart that I couldn't hold on to the last 2 seconds of a candle. But um, I'm not worried about feeling bad. I'm worried about losing money here. But you can't make money if you don't lose money. Yeah, 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 yeah. You go ahead and lose the money. But it just showed me it needed to see that it's going to continue to move higher. As soon as we came back and we closed above that, now we did touch the wick of that. What am I missing? If we are going to continue lower, what have I missed? Right? I mean, what I'm really expecting at this point is probably a consolidation, a move above this high, and then something around 11 o'clock to happen because it did not happen right here. And now I'm under the strong opinion that between 10 and 10:30, something should have happened. Either direction, something should have happened. But we ran and ran and ran all the way to this area and then began to consolidate. So that's the part. That's the part right there. That is the part right there. We ran all the way to this area and then began to consolidate. So if we were going to go ahead and get down, we could have got down with the get down, but we did not go down. So we are here. So I see these declining highs, sort of this declining highs here. See that? But then I see this extremely flat area here. Yep. I see that. I see that. I see it. What does it mean? On the higher time frame, it means that we have a lower or higher close, right? Higher close. So it's just so strange that I'm looking at the exact same charts, but on one chart, the closing prices are showing me prices rising. And on the other chart, it says, well, price is kind of rising, but it's also mm, created this flat bottom narrative of closing price that has probably a considerable amount of liquidity below it. So if we moved up, we'll probably drop down and run that out, then pop up, right? Who knows? On the 15-minute chart is my worst than favorite, my worst than favorite market condition. Wicks longer than the bodies. Wicks longer than the bodies are my least favorite market condition, especially on a 15-minute chart. I've been chopped up in that type of range price action so many times. And then the weird thing is it happens in the when an hourly candle has a very short range, right? It just goes back and back and forth inside that hour. So what does that mean? That means that we're waiting for 11 a.m., right? So at 11 a.m., that's at least four 15-minute candles that's going up and down and up and down and up and down. And that's not going to pop off until, well, we'll be looking at 10:45 before we begin the last candle of the current hour, last 15-minute candle of the current hour. And believe me, no, I'm not bored. I am not bored. I just don't like getting tunnel vision. I don't like getting that narrowed focus where I'm looking at the candle and I can't see what's right in front of my face. And that happens because I'm a human being and I'm not perfect, right? I'm not perfect. So but what I want is I want the long leg of the move, the long leg of the move, and not the shorter leg of the move. If it's just a pullback, I don't want to get involved in a pullback. And it seems like that's what I've been targeting these last couple of trades is just this short term pullback to the downside before we move to the upside. But if this upside move, again, if this upside move is just short leg of a greater downside move, then that would be a problem. However, looking at higher times for price action for just a second to kind of get our minds out off of these um lower time frame candles that are just outputting price second after second. Um, and I don't even think I can get it all on the screen here. So, yep. So we had this low, high, higher low, ran up here, this imbalance, dropped in, wicks down to this gap. We popped right back up. We did not take this high out on the higher time frame. Then we began to roll over, roll over, roll over. We close below the low of this candle. We pop back up into the body of this candle, mean threshold. Then we sell off, Thursday, Wednesday, Thursday, Friday, sell off to yesterday's close, which is here inside of this little bit of an imbalance. But we closed just below consequent encroachment of the space between the low of this wick and the high of this wick, right? Then from there, we just spring out. Boing, boing. So we spring. Yes, remove that. Yes, remove that. So we just spring right out of that level into this is where we are right now. So this is kind of what I tried to describe. I'm not sure if I was able to. This is the imbalance that we're looking at. It was formed right toward the end of the week, last week to this week. So here we are in the discount low, right in sort of this gap. Now, on the off chance, on the off chance that we got to the low of this area and then rejected, that's where I took a short. On the off chance that all we need, like this candle, see how this candle just touches it and then goes away from it. So that was my thought process. On the off chance that we just come up, touch it, ding, and then move away, that's there you have it. So the only thing that we have in this space on the 4-hour chart are these wicks, all right, these tails in this wick. Um, when we move down to the 2-hour chart, we were just going to look for a little bit more clarity, and we see that that imbalance begins to collapse just a little bit to here. And if we really get narrow here, only place on this chart where it's wicks only and no candles is here. This little gap right here. Wicks only, no candles, no candle body closes. So we'll drop down to the hourly chart and see if that gives us any more clarity. So there's this move up from this point, we drop down. This is the 2-hour gap that we have where there was nothing but wicks. And we'll take that and pull this forward. Now we're just looking at this sort of a gap space. Okay. Flex my hip. Getting old, that boy. Okay, so this is what I'm looking at. So as I see all of the price, all right, and I see that this is the highest up close candle after this move down. This is the highest up close candle. Well, this is the highest up close candle before this move down. I don't know if I would consider that to be a gap. So I normally, when I target an up close candle, I'm looking for it to be like this one. See, this candle is the highest one after the gap down, right? So this candle and this candle share sort of this clustered responsibility. If we blow past one candle, then what are we doing here, right? What are we doing up here? We ran into this hourly candle. Now, closing price of this hourly candle is descending down into the body of this candle. So now this is when I want to move to the lower time frame to see, does that mean we're getting any type of an opportunity here because of that type of reaction coming into the last 15-minute candle of this hour. Thursday, we have durable goods and we have existing home sales. La, 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 la. Hi. On the 1 minute chart here, right here on my micros. From here to there, pull that forward. I want to see 15 seconds. I just want to see where we are in the range at premium or discount. Small imbalance right here. After we drop down here and close in the discount, then we popped right up here. Just close right there. Reject a little bit. 55 seconds left in the 5 minute chart. Mm-hmm. Mm-hmm. Yeah, I put a little bit of money at risk here. And I'll put my buy order right there. I don't really know why I decided that that might have been a good trade. I don't really think that it is. And this is the part where reality hits the road, right? This is the part where reality hits the road. Hmm. Because I might not be on my A game today. I might be on my C game or my D game, and it just might not be the best me showing up today. And I need to think about that, and I need to kind of get that locked in whether or not, um, you know, I'm seeing the market clearly enough to even continue to trade for today. Because it's okay if I'm, and you might say, well, you say this on a regular basis, and I do, especially for us new traders, especially for us who've been in the market for 3, 4, 5, 6 years, and we are looking at the markets like this, and we're having our days like this. And I'm not sure if the more experienced traders have days like this where they're looking at the chart and they're looking at the market and they're looking at their own eyes saying, "What am I looking at? What am I looking at?" All right, everybody. Remember, we're dealing with the wicks of 15-minute candles at this point. 10:46 coming into the end of the hour. I just want to make sure that I'm not gotten myself in a lot of trouble. And we're not. I'm down like $40 right now. And I'm very pleased that I've been able to mitigate risk down to such a low degree. Now that we're at consequent, for some strange reason, we've traded exactly the consequent encroachment of the gap. Now we traded over it. 13 seconds left in this minute. I think I'm going to wait till the end of this hour before I think of doing anything else. If we have another, if we have another up close candle at the end of this hour, that's a very strong bullish signal for at least today. But I think what I need to do is I need to take a quick step back. Boom, take a quick step back, look at this, and say 3 minutes the macro begins. Right? Boom, boom, bop. In 3 minutes the macro begins. What can we do? Sorry about that. I don't know why that's still up like that. So in 3 minutes the macro begins, and I think that was a very good thing for you guys to clear it for a second. It's very important for you guys to take ownership of your own trading. If you are trading, trading is extremely um, it's the hardest easy money that you could make. There is risk involved. Trading improperly, you can lose more than you have at risk. I want to see this 5 minute candle close below this consequent encroachment. 1 minute, 30 seconds. I'm looking at the proximity to the macro. I'm seeing where this 5 minute candle appears to be closing. And the first thing I thought was, what? Bias buying, right? My first thought was, oh yeah, this would be a great place to, right? Why? Because if the candle does close below the consequent encroachment, then I would only be looking for trades in the premium of this imbalance anyway. So I would take my short in the premium of this imbalance, put my stop loss outside of this gap. Do I think that I am violating all of the risk management that I've been practicing so far? Very strong question. That's a very strong question, right? Am I betraying the risk management that have been? You see what I meant? You see what I'm saying? Taking the short in the premium of this imbalance for this 5 minute candle to close and discount. Well, what about the next 5 minute candle, Grady? What are you thinking about that? I mean, not much. I'm not thinking much about that. I'm not thinking much about it. It's 10:50. At 10:50, this is where we are. Boom, 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 boom. What is this level? 11 a.m. Hmm. Then this is that prior gap. I believe I got short right here. Now we're right back in the same area. Turnover popped up. Very, very difficult for me at this point. And the difficulty is I wanted to take that short right there. And I didn't. Here's another opportunity to get in very close to that area. $9.51, the beginning of the macro. What am I watching or what am I looking at that has me considering getting short? Two things. The 15-minute chart shows that this 15-minute candle ran to this level. The prior one closed here. This one came in and then turned over and then dropped. First thing that I was thinking of. The reason that I decided not to is that the next 15-minute candle can come right back into the same area or higher to stop us out and then continue lower. The second thing that I'm looking at that has me considering taking the short is the idea that the hourly candle is running to that gap, and prior to its closing, it gets away from it immediately. So we didn't come all the way up here and close here, and then the next candle open, and we got there on this candle, on this hourly candle, and then the hourly candle itself began, it touched the premium and then fell away from it in the last 10 minutes of the candle, saying to me, right, that we have this little band of down close candles where I took that trade just 2 seconds ago. Now we've had this level come down below. We're trading back up to this zone from beneath. And I'm thinking, is it the close of this candle or is it the open of the next candle, right? The open of the next candle is going to give us maybe give us an opportunity to get involved. This is a nice push at the close of this candle. I love it. I love it. I love it. Show me. Thank you. Thank you. Thank you. Right back to this area where I said to myself, "Oh, I want to get a short. I want to get short here." Then turn, drops right down, pops right back into the zone, and then pushes strong all the way through. Because I'm considering, I'm considering low, lower low. That looks like a market structure shift to me, right here into this gap. Why did I not click the button? Because I'm still looking at the clock. I'm still looking at the clock, and the clock is still saying, hey buddy, where do you think this hour is going to close? You think we're gonna run and push all the way back up here into the high end of this hour one more time? That is exactly why I went short right here. That and the idea that we've been fairly responsible with our accounts so far, keeping us under, keeping us within range of profitability for today. And that's exactly where I want to be, just in range of what's happening here? Oh, too early in that 5 minute candle. 5 minute candle got vicious on me. Oh, I'm glad. Look, hey, 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 hey. Let's go ahead and see. Let's go ahead and see. Come on. We did that much, all right? We did that much. We did this much. We came that back right back in here this much. Go ahead and where are we in the 5 minute? New 5 minute candle. This back and forth on the 5 minute candle with these wicks is very interesting. That is very interesting. 5 minutes left in the hour. We've already had our opening on this hour. We've had our low. We've we might have a high where this candle is. This might be the high of this hour. Anything can happen in the last 5 minutes, just like we saw the prior hour. In the prior hour, I think we ran the high of last hour literally in the last 5 minutes of that hour, and we created a completely new high. Let's see if we'll do it again this hour. My stop loss is literally on the high. If we take that high by one tick, it's gonna stop me out. That's the sad part about it. What I really wanted to see was in this last 5 minutes of the hour, I really wanted to see the close of this price begin to move lower, giving us more wick to work with in the opening of the new hour. Am I wrong with my assessment? Yeah, it looks like, come on, let's see. 3 minutes. Now, it's teasing. It's teasing. It's teasing because this entry that I took is it, I mean, it's if you think about it, my entry is just to break right above this wick into this little overlapping gap right here. It would be just, the most delicious little entry you could probably get. And so, it is what it is. It's just a delicious little entry right here. And as we move down, if we were to move down from this point, right in the last 2 minutes of the hour, we run the hourly high. We hold that high for a long period, and then at the very end, we establish a new high, and that's that. All right, okay. We're not. I don't think we've broken $100 as far as drawdown today, but I don't want to go. I don't go want to go. Much past that. I mean, because if we get into a very good trade, then we'll go. We'll be looking to probably bring in like 300, $400 if we can hold it for an extended run. But I am counter trend today, and unbrokenly counter trend. Some days it's just like that. 1 minute and 42 seconds left in the hourly candle. Now, if I allow myself to be worn down enough, then when the trade actually develops, then I really won't be excited to get involved with it. I'm down $80 here. So I just have to be careful. That when I really was sure, I really was fairly sure because of this move below this candle. We moved here, there. So maybe it was the move, we'll run up above that, and then the move, right? Hmm. 11 o'clock. FOMO. I didn't want to get left out of the trade. It feels like a reversal pattern of the day or the high of the day. I didn't want to get left out. Even if it was the high before the close or this day was just a run, um, back up or just a larger time frame retracement. Oh boy. Mm. Okay, here we are, 11 a.m. Remember, it looks like the exhaustion got me. Exhaustion. What kind of exhaustion? How could you be tired? Just the consideration of everything. Just considering it over and over again. Now I'm saying to myself, hey, this is definitely bad trading practices. Because am I trying to catch the high? I think that's the problem. I think the problem is I'm trying to catch the high. And the only reason is that what I do not like is I don't like that first move up or the first move down that is so expansive that it is difficult to put in the stop loss and the take profit because the ranges are so wide. Let me try something here. Just want to get off that. Yeah, I just wanted to get off that high. The ranges are so wide that you're looking at a fair value gap. It's just really overextended, and then you say, "Oh yeah, I want to get involved," and it's just so much further than your stop loss would normally be. Hmm. I think I am triggered. It's calm. It's calm and it's quiet. It's calm and it's quiet, but I just kind of heard like a small voice say, uh, "You've taken all of these trades and you're only down $80." right? Why don't you add more leverage when you get it right, right? Why don't you go harder when the price is finally going your way? And now I'm saying to myself, okay, okay, I see now. I really, I really had a lot of conviction with most of these, so some of these trades. And because of that conviction, then when it doesn't go my way, I'm upset and angry, calm, right? But calm. I'm upset and angry, but calm. And I'm saying to myself, I'm not gonna let this market do this to me. I'm not gonna let the market, I'm not gonna let the, I'm gonna get this money today. I'm gonna get this money today. And the market is like, well, in a tug of war, because I literally have all of the leverage on my side, the odds are in a tug of war against the market that the market is going to win the tug of war. That's what the odds are. Okay. Now, it's barely stopped me out, and now it's going to roll over my way. And the reason it's going to do that is because that would be the most triggering thing that I could see right now. That would be the most, that would be the thing that would have me just chasing price at this point. But I'm going to wait. Yesterday when I waited, the market moved just crazy in my favor. Oh, I'm gonna wait, and I'm gonna be defensive. We're doing a cycle. We're going through cycles. We're going through cycles of price action and psychology. The trader says I'm gonna be patient. The trader is patient. The trader watches moves that he sees develop move without him. The trader says the patience costs me money. I'm gonna be more aggressive, but an aggressive patience. Then the trader makes some money. Then the trader says, I'm going to be patient and loses money. Then the trader says, I'm going to be impatient and loses money. Then the trader says, if I'm impatient or patient, I don't make the money. Then the trader starts to fight themselves, right? The trader starts to fight themselves inside their own heads about market direction, about strategy, about price action. And then how does that help? How does that help at all? It doesn't. I'm looking at this 15-second chart and I'm seeing how we ran above that level, those relative equal high levels that we had from last Tuesday or something like that. This was a level that rejected price in a very strong way when we came up here those times. Let's see what we do this time. Hmm. Do I want to book a losing day? I don't think I have a choice. I don't think it's, I don't think it's my choice whether or not I'm going to book a losing day or not. The only thing that I could do is see a setup that is undeniably clear. So much so that, all of a sudden, TradingView enters on its own without me actually doing anything. Or I just enjoy watching this nice bullish candle form on the day. And it's all right. We're at the high of that new week opening gap. Oh, we're at the high of the new week opening gap. I shorted the low and I shorted consequent encroachment. Now we're 1/4 away from the high of the gap. the only other short I would take in this scenario is if we were to pass um 18,000 and if we were to pass 18,380 and create a fair value gap, a bearish fair value gap at or around or near 18,380, then I think I would get short there. And in that way, I shorted the low, I shorted consequent encroachment, and then I shorted the high of that gap as we came into it. Because right now it looks like we're running to it and through it. But it's just such one just nonstop blue candle, blue range of candles. On the 15-minute chart, we have not had a down close 15-minute chart today, not during the trading hours. Every last candle has been to the upside. Had I known that at the beginning of the day, things would probably have gone a lot differently. No, because I'm saying to myself, well, I've seen days like this. I mean, look, there are days on this chart already where most of the day it was bullish and then it turned over and closed bearish. Narrow range bearish day. But for most of that day, we were mostly up. And then in a move like this, there's no clear area to get long, right? There's no real clear area to get long because there are no pullbacks. If there are gaps, there are no down close candles inside those gaps to react to. Oh, oh, oh. I was right about one thing. I mean, and this is just sometimes what you have to do when you have a day like this in the market where, you've taken all the trades you've taken have been just disgusting. Not disgusting. I think they had proper entries. So many of them went, in my favor for a few ticks and then just kind of just like this candle right here. It just drops down and then turns over and continues higher. But the one thing I was right about is that the setup from the pre-market led right into the opening, and then the trade of the day literally happened immediately off the open. I was inverted on that trade. I was on the wrong side, but that was at least you know visually and analytically, we could see that the move was going to happen immediately off the open, and it did yesterday and today. Immediately off the open, we got involved. So how does that help us? It's just a ego soothing technique. You could use it too, right? You can use it too. You clap up, you clap yourself up, right, for when you have 8 out of 10, right? If 9 and 10 are trade execution and taking profit, you don't have those two and you have everything else. Be very, very happy that you're there. there are many people who don't know anything about trading at all, right? They don't have, 1 through 8. So if you have what you have, you got what you got. That's it. It is what it is. It's not what it's not. Yeah, I'm just trying to mask a little bit of frustration. Yeah. What is this feather? What's this feathery? What is this feathery price action I'm looking at? What is this feathery price action? Right? What are we doing? Is that a sailfish? Is that an angelfish? Why? What are we doing here? What is this? Is this an angelfish? What is that? Sailfish? What is it? It's a tight range consolidation on lower time frame. That's what it is. And it happened just prior to the excuse me, just prior to that weekly gap high. And then it got very close into proximity to just a quarter, like a quarter of the range away from the high of that new week opening gap. And then we begin to consolidate wildly on the lower time frame. So I'm assuming that we're going to break out of this range in one direction or another. But if the range is so tight, I'm looking for manipulation here, like a fake move in either direction, right? And then I'm looking for, and then I'm looking for something else, and then I'm looking for something else after that. Bing, pow, pow, pow. Let me take a quick look at the ES. Same, it looks exactly the same as we look here, except it's not sideways. It's still moving higher. Then a slight flush to the downside here. Let's see if we're gonna make another wick or if we're gonna make a body. Discipline is a key element of trading that I am not often fond of. What is this? What is this sideways trash? What is that? Is that a sailfish? I'm gonna say it again. Is that some type of a sea crustacean or is it a centipede, a millipede? What is happening? What is that? I'm looking over my shoulder again, and every time I look over, I'm looking for some indication in the news or something that looking for some indication in the news that something strange is going on. Besides all of the other strange things that happen. Let's see. Gonna pop that down. We're gonna go maybe a little bit of CNBC TV. I'm not sure they would give us stock market updates and live news. I have the sound down, so I'm assuming that I expect to look over the screen and see people running, pulling their hair out or something. Dismiss. Follow us live on XYZ. Okay. Nothing. Uh, Maybe I should go to what? Hold on. Okay, CNBC didn't really help out. Maybe Schwab Network, Benzinga. What do we think? We can go to Schwab Network, see if they have any live news or any live market, anything that's gonna help us. Oh, they're just talking about earnings. I guess Tesla did better than everybody thought. Consolidation sideways on the Nasdaq. Small imbalance on the ES. Small tiny little imbalance here on the ES. Just dropped right into it, then popped up. Similar to this imbalance here. And you see this porous price action, sort of these gaps beginning to form in price. A lot of times, one of the weird things that I've noticed when I used to trade, well, I haven't stopped, but if I go down to the 5 second chart, right? We go down to the 5 second chart. When we get like into a real reversal area where price reverses, these gaps start to form in price more often. Sometimes it happens even on the 1 minute. You just get closer and closer to where the price is going to change direction. Price accelerates, but as it accelerates, these gaps start forming, right? And as the gaps start forming, then yeah, thinking of moving my camera, but I'm not sure where to. Okay, on the ES, prices dropped down to the low of the prior down close candle. Nasdaq is doing whatever this is called, stalling out maybe. Okay, they're stating the obvious. Stocks move higher after the Monday sell-off. That's obvious. Thank you. Thank you. We are currently on the Nasdaq at the same level as Monday's high. We're in the wick of yesterday's price action. One of these days, I'm gonna get some kind of a streaming music to put in the background. Something that's really kind of a vibe, right? Something kind of soothing, but not too distracting. And I don't think I'm not gonna like pipe it into my headphones. I want to just pipe it into the stream. So on the what do you call it? I want to call it watch back, but on the review, or as you watch the live stream back, then the viewers can hear some music in the background. It's just not just silence or a fan or dogs barking and stuff like that. And I'm sure you probably can't even hear that with the sound cancellation deal. So on the lower time frames, it's like, oh, look, price is dropping over. Let's see this massive gap in price right here. Huge space where price is not really truly traded to and accounted for. Now we just turn right back over and we go into that zone, close it up. We are at yesterday's high. What does it mean to run prior day high? I'll tell you what it means. It means when you run the prior day high, the only thing that you can do is immediately take your short tool out and get to shorten. No, but I literally feel exactly like that. Like, look, right here in this range, if I just decided to go ahead and just get short right here, I would not be mad at myself because we just ran the prior day high. How many people love taking the prior day high trade? You sweep the prior day high, just go ahead and get short. Oh, don't do it. Don't do it. Don't do it. Don't do that. Don't do that. Don't do that. That immediate delivery to the downside, that's heart wrenching for me. Please don't do that. Please don't do that. Please don't immediately just deliver to the downside like that. Sometimes you have to wait all day for a trade to get to a particular place, and then you have to wait all day for it to conclude, right? To finally just play out. Please don't come up here, do this trash. I'm start screaming, Get your short tool out. Get your short tool out." And then just collapse in my face like this. Whew. Look, we just swept the prior day high here at 18,383.25. Easily took me out of the trade on the sweep of the prior day high. Sometimes that's all. Sometimes that's all it takes. And yes, yes, this is another problem. This is another problem of trading with lower risk is that sometimes you just see opportunities that you would normally see with higher risk. And with higher risk, you'd say, no, 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 I don't think so. But because you have lower risk, then you say to yourself, I'm going for it, right? All right. $142. I just lost 42. So now my losses are beginning to accelerate. I'm tired. 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 Not physically, not physically, but I am really letting myself get emotionally involved with this. And this is literally the area where I said I was gonna look to get my short in. I was like, look, if I see something on at the high of that gap, I'm gonna get short. And I did. Early, yeah. Low in the range, yeah. Was I wrong? I don't think I was wrong. I think we are going to start moving down at this point. I don't believe that prices are going to be sustained at these levels. And if price isn't sustained at this level, hey, how you doing? If price isn't sustained at this level, then what can I do? Right? Because taking multiple trades and taking all of these trades is something that have been working on. And then exiting the trade or exiting the market exactly at the moment where it finally all pays off is something that I have also been doing like, consistently. And this is what I this is and this is one of those things where you have to really understand that it's possible. And it is possible even after you've been improving your accuracy over a period of time, that you have these streaks where your accuracy begins to just fall out of bed, as they say. It just, your accuracy is like building a roof of your house. You got everything going well. You're you know, hammering everything in place, and then all of a sudden you get down and then you don't fall in the gutter, you fall past the gutters as far as your accuracy is concerned. 11:25 a.m. Let's see what this can do for us. Lower close, lower close, lower close. Retest to those relative equal highs at this range. What are we thinking of? Maybe a 50% retracement of today's move, 25% retracement of the overall move, possible. Maybe this is just a scalp. Price just drops right down here. And then I just start saying, look, I was down $140. Now I'm down $130, right? 3 minutes left in the 5 minute candle. This has been a very strong day. Right back up in. Take a quick look at the ES and see if the ES is giving me any of the same indications of whether or not I'm dreaming. Here's the ES. The only thing I noticed on the ES is that we had this move down below that, and then we popped up, and now we've kind of turned over and dropped back in. But this is a 1 minute chart. It's descending nicely. Let's see if the NASDAQ is participating. Let's see if this will continue. That's the only thing we can do here. No real displacement. Just like price just slipping and sliding. We did gap down, and then now we've retraced to the up close candle here. 1 minute and 50 seconds left in the 5 minute candle, which is really the real tell. This 5 minute candle is really the measuring stick for this trade, right? That right. So for 4 minutes and so for 3 minutes and 30 seconds, we've been performing like this, right? We've been down, down, down for 3 minutes and 30 seconds. Hmm. 1 minute and 10 seconds left. I think the at the high of this move, we were like up like $25, $25. A little bit better movement. 23 seconds. Do not fall asleep here. Do not fall asleep here. Not interested to see whether or not we're going to come back into this 5 minute candles low, wick, or range or anything. Right. So it's not like, so if I had like minimal or no drawdown, I'd just be sitting around saying, well, let's just see whether or not it comes back and goes forward, and then we'll give it windows of opportunity. I'm not giving it any window of opportunity to do anything. I think maybe this is like TP if we would have dropped into this range. Okay. Um, we're in this trade right here, and I'm gonna do something that I've never had any real um success with. We had consequent encroachment of the new week opening gap. I need to take a quick break and go do a thing or two. So, I'm in this trade, and I really would like to manage it more effectively than this, but I really need to step away from the chart for just a second. So I'm gonna let this stream like so, and we'll see how far we can get here. I'm just gonna take a little run to see, right? Okay. This is the reason I need some music playing in the background for these types of issues. Okay. So the magic of drawdown. That's the magic of drawdown, right? So the magic of drawdown is this. It's one of those things all day long. Now I'm only up $2 after all of that hard work and everything that we put in. Now we have to figure out, set still and figure out, is this going to be the short leg of the day or the long leg of the day, right? So let's say that move to the other side was the short leg of the day. We just ran to some area of liquidity, we hit it, and now we're going to displace lower. Now we have to just sit tight and see if that happens. This area right here, the low of this gap, I need to see price go well below, beyond that so that I can move to break even on the day. And then after that point, I would just kind of sit still and just, see what happens pretty much. Pretty much. Which is excellent. I mean, which is actually very good because we didn't want to go backwards, but we didn't want to have a flat day with no, see these down close candles on 5 minute chart. We didn't want to have a flat day with no real, with no profit. But unlike a 9 to 5, this is another level of risk that we have in trading that many people would probably not understand, thinking that, oh yeah, you'd make, there are two scenarios out of the three scenarios that are very different, right? First scenario is I make money. Whoa, great, right? Great, yay, you made money. Good, right? That's scenario one. Scenario two is I lose money. Oh, boo, boo, we don't like losing money. Scenario three is I end the day after all of the work that we've done exactly where we started. Now, I didn't want to move my stop loss. I know that everything seems like I should have just went ahead and moved my stop loss and got myself back to break even on the day, flat, called it, which is probably the right thing to do. Um, but I'm still in this trade. It's early in the day, midday, prior to lunch, well, 15 minutes to the lunch candle to 12 o'clock. And I want to just see this candle move below this up close candle. And then if we move below that up close candle, I'm gonna go ahead and actually what I think I'm going to do is we've been in the market for 2 hours a day. It's a nice little 2 hour stream. I think we're gonna go ahead and end the day here, and then I'll just post a recap later on. Because the smart thing to do, if I was smart at all, is I would literally go ahead and break even at this point, right? I'll just break even. Or I could just take the loss, right? I could take a small loss. Between the two, I'm gonna tell you what I would do. I'm gonna tell you what I'm going to do between those two options: taking a small loss or getting out the market now. I'm gonna stay in and take the small loss. As ridiculous as that might sound, I'm gonna see if the market comes all the way back against me here. Yep. And again, the reason I do not want to get out here is there could be much more to this move to the downside. Grady, well, what if we just drop down here to hit this down close candle and then we're going to move up off of this down close candle right here? I think that's exactly what I'm going to see. Only thing that would satisfy that would be just moving past this down close candle and closing in the next 13 seconds. But a small losing day is not unbearable. Even $100 day, right? It's not unbearable. We were down $2,000 at the beginning of the week. That's where we started at the beginning of last week. We were down $2,000. At the start of this week, we had come back within range of like $300, right? So even now, if I were to go ahead and exit, I'd be adding $10 to that. I'd be adding $10 to the pot, and that's fine, and that's fine, and that's fine. But if we're gonna go ahead and we're gonna continue to um process through price and give us and price may give us 18,206, right? 18,206. Then that's really what I'm aiming for. Something like 18,206. And the reason that I say that is just looking at the 15-minute chart, looking at our total range of the day. Well, literally the total range from the move up from the night, right? And then we've come into here. I'm just saying this particular pullback could give us, let's say OTE from the high, sorry, OTE from this high to here. So that was a 30% pullback right there already. That was 30%. Now I'm concerned, right? That was a 30% pullback. That from this high, we dropped all the way back into here. Boom, we hit 70%. Okay. 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 30% pullback. But like in just juxtapose that with this one, this was a 50% pullback, right? So we moved all the way up here, fell back in 50%, ran below that, and then took off. All right. So what I was saying was is that I was saying to myself, hey, I could be looking for 50% retracement, which is 18,200. 30% retracement, it is what it is on a 15-minute chart. Hmm. We're down below this imbalance again. I didn't notice that until now. Okay. Well, I would love to stay online till this trade comes to its conclusion, but I think I'm going to go ahead and stop it here, stop the stream, let this price just do what it does. We'll all know where the price goes from here. So if price falls and you see this later on, you'll say, "Oh yeah, all right, price fell." But if it returns on us and runs the high, then it's going to stop us out, and then we'll just close out the day with a small bit of drawdown, and then we'll just come back at it tomorrow, fresh eyed and fresh face and fresh and something something, just really ready to go at it. Um, yeah. And I don't know what's up with me because I really feel like I got some good sleep, but in these last few days, last few trading days, it's just been I guess a struggle. And I think the struggle really is just maintaining the appropriate level of focus while trading, you know, because um I'm just gonna just kind of mark out this overlapping level. I'm not saying this is a balanced price range. I just wanted to mark that overlapping level out just so I'm understanding where we're moving through. Yeah, so on a 5 minute chart. Yeah, we could just we are. We're running right past all of that. This is not unusual for me to be in this particular trade. I don't it's not a bad trade. Honestly speaking, this is not a bad trade. For a little scalp, this is a beautiful trade. The entry is here. We drop down into these levels. We run past these little gaps and things. This is a nice trade. It's just that I don't want to be in the short leg of the trade. I want to be in the long leg of the trade. If we were to, if you were to say, well, wow, Grady, this is 94 points, right? That's fine. That's great. But this is what I will this is the trade I'm aiming for, which came first, right? This came first. The 268 pointer came before the 98 pointer. We can't all just we can't all, we can't win them all, as they say. We can't win them all. But this is disappointing to me. It's really disappointing to me because I wanted to be in the long leg and not the short leg, and I ended up in the short leg. Hey, little short leg. So, yeah, we're gonna have to hammer this thing out in a better way than what we're doing. Got to figure something out. Figure something out here. All right, so I'm gonna end the stream here. Tomorrow, I want to come back with a lot more energy. I want to come back, fresh. I want to come back with a new focus, with clarity. Um, so don't compare yourself to everybody else, guys. Do not compare yourself, ladies and gentlemen. Do not compare yourself to anybody else. Um, they've bumped their heads more than you've bumped your head. So they have calluses and they have sensitivities that we don't have. When we get to that point, when we get there, we'll perform on a level that we will be um almost satisfied with, right? But it's not about our personal satisfaction as much as it's about um taking away from the market what we need to take away. So um yeah, drink your water, man. That's what I'll do. I'll have a sip of water here and then mm, we'll be back on the charts. I'm Grady on the charts. Tell you the truth. Thank you for stopping by. Like and subscribe. We'll see you guys tomorrow. Bye bye.